Good evening, friends. Today, we will look at one of the premier auto components manufacturer called Minda Limited. Earlier, it was called Minda Limited. Now, after a collaboration agreement, joint venture agreement with it is called Minda Limited. It's one of the leading manufacturers of auto components domestically with leadership across many product segments with 20 plus product lines, 1000 plus business partners, over 23,000 employees, covering 50,000 plus touch points. The company has 6 decades of experience in the auto space, well diversified portfolio with lot of clientele globally and domestically both. It is continuously expanding its capabilities in many product lines through capacity expansion and partnerships with the global majors. This product portfolio is well insulated from any foreseeable market disruptions. They are required anyway. See, demand coming down, that sort of a thing is unlikely to happen. That is the perception of the management. With an AS EV agnostic product portfolio. See, electronic vehicles are coming. Now, the old oil engines, etc., will come down. But will Minda will be affected? No. It is independent of electronic vehicle, etc. So the existing and potential clients all will continue to purchase. So company has been steadily growing its global presence through sustained capacity expansion and channel extensions. R&D focus is very strong. Infrastructure is being built up for all these purposes. A team of 700 plus engineers are there, 275 plus patents. Patents are 275 plus. 250 plus design registrations, 75 plus R&D technology projects underway. Robust financial performance has been there, especially in the latest quarter also, delivering strong shareholder return supported by reputed promoters, Minda Group. Rich experience and backed by professional management team. Now, it is serving 4-wheelers and 2-wheelers, and geographies are international, domestic both, channels are replacement and OEM both, like that. It's this group, Minda Group, is headquartered at Manesar in Haryana. Engineering Research and Development Center is available at Manesar and also at Pune and Sonepat. It is the largest switch player in India. Largest player in India and second largest globally in the horns market. Horns market. Third largest automotive lighting player. So, partnership with 14 global technology players. That means it is keeping abreast with the latest technology. Revenue breakup. Lighting is 24%, switches 35%, acoustics 10%, LMT 15%, others 16%. And here OEMs contribute 86% and replacement market 14%. 2-wheelers 48%, 4-wheelers 52%. India 83%, international 17%. I given all the breakups. Product range, wide product range, 20 plus product categories are there. alternate fuel systems, air filtration systems, canisters, brake hoses and fuel hoses, combined braking system CBS, noise suppressor cap, etc. It has filed for 260 plus patents and 250 plus designs. So continuously R&D. Reputed and diversified client base. Who are they? Bajaj, Honda Motorcycles, Hero Motocorp, Royal Enfield, Yamaha Motors and Piaggio. All big names, reputed names. Collaborations. Major collaborations in the past decade. Most recent collaboration was with the TLA for LPDC alloy steels in 2020. Other entities also the group is working so that they can give technology. Partnership with Daewoo Global, DAYOU. South Korea has enabled the group to expand its portfolio. It will start supplying LPDC wheels to a leading Korean OEM by FY21-22. Taking the technology, it is going to supply to a Korean OEM. 10 R&D centers are there globally, and it spends about 2.5% of its revenue on R&D. Currently, 75 plus R&D technology projects are on hand. 62 manufacturing plants are available across the globe, including Indonesia, India, Vietnam. Joint ventures and technical arrangements, etc., with the technology leaders from Japan, Italy, Taiwan, etc. 12 product engineering centers. Largest installed capacity for PV alloy wheels. Minda India Limited is commissioning a two-wheeler alloy wheels plant with a proposed capacity of 3.6 million wheels per annum. The plant is expected to commence in Q2. Might have commenced by already. Now, one of the factors favorable to it, you can say favorable, sometimes it may look unfavorable also. Low capacity utilization as of now, 40 to 50%, something like that. It is trying to improve its capacity. See, as and when it improves its capacity, it is not going to spend a single paisa on capacity expansion, but just improving the existing capacity utilization. So it is going to get good profits, etc. It has acquired 100% interest in a German company, I think, Delvis GmbH, a complete system developer for automotive lightings. So it is going in for best collaborations, technology supply, etc. Market cap is around 30,668 crores. 30,368 crores. Current price is around 530, something like that. 52-week high is 630, 52-week low is 384, which means current price is between the two. Somewhat nearer to the 52-week high. Book value is 64.6, dividend yield is 0.23%, ROCE 13.8%, not low, not high. ROE 12.1%, face value 2 rupees. Now, if you look at the price car, it was going down before June. Now, from June, the price has gone up. Up to June like this, after June like this, it is going up. Now, latest, it has forked. The promoters have increased their holding by 2.69% over the last quarter, which means they have got a lot of confidence in Minda. They want to improve their holding on the company. Sales growth has been reasonably good, 27.3% over the last 10 years, which is very, very good. Now, let us look at the quarterly results to some extent. Sales. Last year, September, that is Q2, 2114. This year, September, 2877 crores. So, year on year, 36% growth. Quarter on quarter, 12.6% growth. Operating profit currently is 228. Last year it was 228. Currently it is 318. It has been growing up. See, sales are growing up, operating profit is growing up, net profit is going up, EBITDA is going up, everything is going up. So that is one thing that we have to note. So operating profit has gone up from 228 to 318, some 39.47% growth year on year, 19.5% growth quarter on quarter. Operating profit margin is around 10% now. Earlier it was 11%, 10% like that. 10% is okay, not bad. Net profit is has grown from 113 crores to 182 crores, that is about 61% year on year, and quarter on quarter 21.33%. EPS growth is 1.66 to 2.97, some 79% growth year on year, 22% growth quarter on quarter. EBITDA has grown by 40% year on year. EBITDA margin also has grown. Sales have been growing. Capacity is still there. Lot of capacity is there, and they are expanding also. They are expecting all the capacity to be utilized, and more capacity is being built up. Profit also reasonably good. It is growing. Stock price is also going up reasonably. It is a reasonable good compounder, but not a multi-bagger. Please understand, it was not a multi-bagger, but it is a very good compounder. Shareholding, as I said, it has promoters have increased their holding. Last quarter it was 67.41, but Q2 70.11. FIA is 9.06 to 9.07. DIA is 13.8 to 13.95. So what has come down? They have purchased all from public. So public holding has gone down from 9.73 to 6.88. Now, what are the other highlights of the industry? Semiconductors chip shortage is there, but slowly supply side pressures are easing with promising volumes from the OEMs, original equipment manufacturers. Improved two-wheeler demand amidst stable PV volumes. PV demand continues to remain promising, led by the array of new launches. Pricing pressure has started to ease out as metal costs continue to drop. So that's also a good point. Government initiatives. Anti-dumping duty has been extended on four-wheeler alloy wheels, so that there will be level playing field with the importers. Now, what are the other highlights? The joint venture with Tachi S, where the board has a stake of 51% for basically seating mechanisms. Then joint venture with Buhler. Here also more than 50% will be held by Minda. That is for manufacture of traction motors for two-wheelers, three-wheelers, etc. and electronic vehicles. Then expanding the four-wheeler alloy wheel capacity, that is being capacity is being extended at a cost of around 190 crores at its Bawal plant. So new four-wheeler switches manufacturing facility is approved by the board. 110 crores. New four-wheeler light manufacturing capacity is approved by the board at a cost of 400 crores. Initial outlay is 230 crores. 5 years total is 400 crores. Now, some of the strategic developments, if you have to mention, switches received order for heated two-wheeler handle grip from an American auto major. Received an order. How much a big order is there, that is not told by them, but it must be a good order. Our American auto major has given. Lighting received order for two-wheeler lamps from an American auto major. Again, here also the quantity is not mentioned. Order has been received. Because it is received from an auto major of America, must be a big order. Received an order for complete lighting solutions from a two-wheeler electronic vehicle OEM. So already electronic vehicle OEM also they are supplying lighting solutions. Castings received order for battery housing from an electronic vehicle OEM. These people are going to manufacture batteries and whatever is required for the battery, etc. Die casting business for forays into PV category post receipt of an order from a PV OEM. Then acoustics, India business remains stable. European subsidiary is there. Clarton Horn remained under pressure along with unprecedented increase in energy cost. Seating, incremental orders are received for new launches of existing two-wheeler OEM customers. Side stand sensor, one Italian OEM has given orders. So like that, so many orders are being received. So it is attaining a leadership position in major product categories. Strong brand recall is there. So the overall, the position of Minda is good. It is forming joint ventures, collaborations, technical arrangements. Its capacity utilization is at present low, and it is expanding capacities. The latest results are also good. It was never a multi-bagger. Whether it will be a multi-bagger in future, I can't say. But whoever is going to buy any share, any company share, I always insist, you must take the decision on your own. Go through my all the details what I have given, then try to analyze all of them and try to collect whatever details you want further. And you must be making the decisions with your money, Therefore, be very careful. Always. There are very good companies. Minda is also a very good company. So far. And whatever I have told just now, all those seem to be good. But we should always be watching every quarterly result and every development. See, we are putting our money. We should be watching the results and then taking the decisions. I may not watch. I cannot watch your portfolios. You have to watch your portfolios and take your decisions. I wish you all the best of luck. Listen to it 2-3 times. Whoever has not subscribed, please do subscribe. Tell your friends also to subscribe. I will be generally giving good companies only. But don't take it as a recommendation to buy from my side. The recommendation to buy should be from your side. Thank you.